Novo Nordisk, the pharma giant, is standing at a crossroads. For years, they've been the undisputed king of the cardiometabolic space, but the game is changing. In this video, we're going to break down the strategic challenge facing one of the world's most valuable companies and what it needs to do to secure its future. This isn't just about a stock price. It's about the future of treating some of the world's biggest health challenges. Let's get one thing straight. Novo Nordisk is a powerhouse. They're on track for record profits, with incredible margins and a fortress-like balance sheet. Their manufacturing capabilities are second to none, a massive advantage when demand for their blockbuster drugs is soaring. So if everything is so great, why has the market been so nervous? The simple answer is competition. The market no longer sees Novo Nordisk as a monopoly. It sees a duopoly, with Eli Lilly emerging as a formidable rival. This isn't about Novo failing. It's about a shift in perception. Investors are looking at the future, at the pipeline of new drugs, and they're worried. They see a company that's heavily concentrated on one type of drug, the famous GLP-1 while its main competitor is diversifying its bets. The market is essentially asking, what's next? This uncertainty has put a lid on the company's valuation, even as its performance hits all-time highs. So how does Wall Street really see Novo Nordisk right now? We can break it down into three main camps. The largest group, let's call them the pragmatic realists, make up about 40%. They see the new competitive reality and think the stock's re-rating is fair. They acknowledge the company's operational strength, but are waiting for a clear plan to grow beyond its current successes. They see the current price as a potential entry point, but only if the strategy becomes crystal clear. Then you have the skeptics, about a quarter of the market. This group worries that Novo has lost its innovation edge. They see attempts to diversify into new areas as risky, long-shot bets. Without bold moves, they fear the company could transition from a high-growth superstar into a mature, slow-growing cash cow. This view would justify an even lower valuation. Finally, there are the governance optimists, about 20%. This group sees a secret weapon, the Novo Nordisk Foundation. This unique ownership structure allows the company to think long-term, to invest patiently and strategically, even when the market is panicking. They believe this gives Novo the stability to reinvent itself and are willing to bet on a successful transformation, which would send the valuation soaring. The path forward hinges on a multi-pronged strategy. This isn't about defending a fortress. It's about launching new expeditions. Here are the 5 key pillars Novo needs to build on. First, diversify. The company must aggressively expand its research and development beyond its current focus. This means pushing hard into new technologies like RNAi and gene therapy. This is the single biggest move they can make to convince the market that double-digit growth is sustainable for the long haul. Second, weaponize their manufacturing. Novo's ability to produce these complex drugs at scale isn't just a logistical detail. It's a core competitive advantage. They need to frame this as a strategic weapon that ensures reliable supply and protects their industry-leading profit margins. Third, optimize their capital. With very little debt, Novo has immense financial firepower. They can and should use this to fund acquisitions, invest in R&D, and accelerate the build-out of new manufacturing sites. Putting that money to work will fuel the growth that investors are demanding. Fourth, sell solutions, not just pills. They need to deepen their relationships with healthcare systems and insurers. By bundling their current drugs with future innovations, they can create long-term, sticky partnerships that guarantee predictable revenue streams for years to come. And fifth, activate the governance shield. Novo needs to shout from the rooftops about its unique foundation ownership. This isn't a quirky detail. It's a guarantee of long-term thinking and stability. Communicating this effectively can convince the market that Novo is a less risky, long-term investment, which directly boosts its valuation. So what's at stake? The difference between success and failure here is enormous. If Novo Nordisk successfully executes this strategic pivot, its value could climb towards $450 billion. If they fail to diversify and innovate, they risk stagnating. With their valuation stuck in the mud or even declining, That gap, a potential $250 billion, is the strategic opportunity. Novo Nordisk isn't in a crisis of performance, but a transition of identity. The market sees the new competitive landscape, but it might be underestimating the company's ability to adapt. By leveraging its incredible strengths to launch a new era of growth, Novo Nordisk can transition from being just a leader in one drug class to becoming the undisputed, next-generation leader all of cardiometabolic care. Thanks for watching. If you found this breakdown insightful, don't forget to like, subscribe, and hit that notification bell for more deep dives into the companies shaping our world. See you in the next video.